For more insight on early morning trading, I'm joined by Jeffrey Small, who's the president of Arbor Financial. Jeff, great to speak with you once again. First and foremost here, perhaps we start with the response that we've seen from some of the vaccine maker and the treatment manufacturers around the broader COVID-19 pandemic. We'll begin with Regeneron here in this case, though. Their antibody cocktail is said to be less effective against the new variant. Meanwhile, Moderna, Pfizer, and Johnson & Johnson, J&J, they have outlined their respective strategies to tackle the new strain. How could the Omicron variant impact economic growth from your perspective, and where do you see opportunities in the market in the face of this?
Well, we can thank Omicron for the recent dips, but I can tell you right now that this virus will be overcome at some point. We've seen this act before. We will have pharmaceuticals that will work. And the reality, Brad, is that this is a great buying opportunity for folks to get back into the market before the market has another leg up in growth. I don't see anything happening bad to the economy in Omicron unless we see hospitalization rates go crazy and mortality ends up skyrocketing to some degree. But if this is going to be the average run-of-the-mill Delta variant, even though the viral load is larger, so far the data is not out yet. But the problem with this, Brad, is we're not going to know for 2 to 3 months exactly what the impact is going to be. So the markets are going to present good buying opportunities over the next 60 to 90 days.
And so I guess that's the headwind concerned here, is that for the Delta variant, we were hearing from companies, the vaccine manufacturers, come out and say pretty strongly after their initial research and testing that they were seeing a response, especially when it was related to the Delta variant, that they were seeing that their vaccines were still efficacious, largely against that Delta variant. This is an instance where we've heard from one of the leads at Moderna, the CEO of Moderna, pouring some cold water on that expectation. So what could that signal in this near term for you?
Well, yeah, I saw the comments this morning from the Moderna folks. I see that as a buying opportunity. The markets are waiting with bated breath. But what investors should do going forward is buy companies that are going to have good earnings in an undynamic environment from COVID. And so what does that mean? Well, if you look at what the market did on Black Friday, we saw massive movements into utilities, into REITs, into tech, and into healthcare. Those quads carried the market. People are getting defensive for good reason. The market is tentative right now, and that's going to continue until the jury is really out and gives us a verdict on Omicron and what the results are going to be with the therapeutics and all the treatments.
Okay, and so also here we've got Fed Chair Jerome Powell and Treasury Secretary Janet Yellen set to testify before Congress about inflation and the variance risk on the economy. Do you expect a change in the tapering timeline that we've been tracking?
I don't expect the change in the tapering at all, Brad, until we see actual shutdowns and hard data. Unless we see shutdowns, then we'll see tapering expand. It won't stop. But for now, I believe the American people have had enough, and they're going to roll with the punches with the new COVID variant.
Airlines, they're down, while stay-at-home stocks like Zoom, Peloton, Netflix, they're rising. I want to get your take on these industries, and particularly what we've been tracking between the stay-at-home play versus the reopening play here.
Well, the stay-at-home plays are all very good business models, but boy, have their valuations been stretched. And so I think you got to be very careful with the stay-at-home plays because they're completely codependent on the massive expansion of Omicron and the hopefulness of the unhopefulness of the economy being shut down at some point. On the airline side of the equation, we had the largest amount of passengers on Friday go through the TSA, 2.7 million. I think that trend is going to continue. I would not look for people to stop traveling. They want to keep living their lives, Brad.
Additionally here, we got to talk about President Biden. He met with the CEOs of Walmart, Best Buy, and others to discuss the supply chain constraints in light of the Omicron variant. I want to get your take on the retail sector, given that Cyber Monday sales were down for the first time, and essentially flat, in terms of the expectations that we're expecting perhaps going forward from this point, as there had been some strong economic data to suggest that coming into this holiday shopping season, consumers would be in a better position than thought. But it's also coming down to whether or not consumers are seeing enough value on the table that is worth some of the supply chain headaches, the shipping headaches, and then additionally the prices at which they're paying for some of these products.
Well, before Omicron, Brad, I wasn't too worried about Christmas shopping, but we all know that Omicron is going to put a little dent in Christmas shopping, even though, as the data shows right now, we are ahead of last year's spending. And so if Omicron gets worse, that's bad for consumers, it's bad for goods. There was already a shift from consumers purchasing goods to services anyway that was occurring, so we weren't expecting Christmas to go double digits in terms of growth year over year.
Additionally, despite the recent declines here, the NASDAQ is up nearly 1.5% in the last 4 weeks. Let's get your outlook as well on the strength of the overall tech sector, which has continued to be under valuation scrutiny.
Yeah, valuation scrutiny is a good term. We saw the tech leaders actually have compression on their multiples with revenue compounding and expanding. And that really should be the theme for 2022. Investors should be looking to buy stocks whose valuations are lower while their revenues have been expanding. There's too many good tech plays out there right now in that area, and there's too many other tech plays that are overstretched in their multiples, but they're still good business models. They're just too pricey at today's standard.
The energy sector, meanwhile, having its worst performance over the month here, down over 4%. Energy is still the top performing sector, though, we should note, up over 47% year to date. Let's get your take on energy's momentum, particularly as we're seeing even more investments long term that are going to be on the cleaner and sustainable energy side.
Well, of course, gas consumption is going down. Demand is huge since the rebound with all of the stimulus. We're hit now with this Omicron variant. We're going to see gas prices drop a little bit in the interim, but over the long term, by 2022, this time next year, I see oil at $100 a barrel. Demand will be very, very strong.
Jeff, good to speak with you. Thanks for taking the time and giving us some of the insights as you're tracking them. You're taking a quick look at XLE ETF on the day down as we've begun today's trading session in the red across the board for the major averages. The Dow down 0.9% roughly, S&P 500 down by about 0.8%, and the NASDAQ down by about 0.4%. That was Jeff Small, who is the president of Arbor Financial, joining us here this morning.